Hello, everyone, and welcome to the Investing with IBD podcast. It's Justin Nielsen, your host, and joining me as he does every week is Arusha Pires. He's an O'Neill Global Advisors portfolio manager. And our special guest this week, we are having him back on the show because he's such a great guest. It's Brian Shannon from Alphatrends. He's a CMT, and I should mention he's got a new book. It's
Sure.
the Anchored VWAP. Everyone's got it. Yes. So this is something that just came out. Of course, he had his original book, the multiple time frames, which I think a lot of people have just really, really enjoyed. And this new book, and I'll let you talk a little bit more about it,
Sure.
Brian. But you really dive deep into this whole idea of the anchored VWAP and how people can use it for entries, exits, and managing their trades.
Right. Yeah. I mean, there's a lot there. And, it seems like, why does this book have to be 260 pages long? But I went into, the theory of it, why it's important, how it came to be first an execution benchmark, then how it became a tool for institutional, algorithms, and now as an analysis tool. And so just the kind of the psychology of the whole thing. And then I laid out 9 specific strategies to use it. And the beauty of it is it can be used on every single time frame. A lot of people have traditionally thought, well, the VWAP, that's just for day traders. And the VWAP itself is for one day. The anchored VWAP, though, we
Right.
can use from the middle of the day if we want to, anchor to the 12:15 low and the 238 high if you really
Hmm.
want a day trade. Or you can go back to the IPO 4 years ago, or some important event 5 years ago on a monthly chart, and it still has significance. Price has memory. So yeah, we'll
Yeah.
talk a lot about that.
Yeah, absolutely. We'll get into that in the second segment. And for those that are not familiar with the acronym, VWAP, of course, is volume weighted average price. And you put an at the front, and that's where you get that anchored VWAP. So looking forward to that discussion. But first, let's get into the markets a little bit and just kind of talk a little bit about where we're at right now. And we'll start with some Market Smith charts that Arusha has up right now. And Ryan, I'd love to get your thoughts. I mean, we had this really strong move from the bottom in October, and it was really the Dow Jones Industrial Average that was leading that charge.
It was,
Um,
yeah.
but the beginning of this year, it's been all about the growth stocks, and the Nasdaq has come on much stronger. We're seeing some of these things that were left for dead in the streets, like Shopify and stuff like that, that are starting to look interesting and coming back above their 200-day lines. What's your take on the current market action? We just had a pullback to the not quite the 21-day moving average line, but do you think it's all coast is clear?
Yeah, I never think the coast is clear, Justin.
Always a little bit of fear.
Well, a healthy
Yeah,
respect of fear, I think,
yeah,
of risk rather than
yeah.
fear.
Hmm.
But it's definitely as good as it's looked in a while. We've had a nice beginning to this year. So far over the last 2 weeks, we've really digested those gains in really kind of a sideways pattern. So the supply and demand is, refiguring out where that balance is in the market. And as you mentioned, the technology has led the way, and specifically the semiconductors, which are up, I
Yeah.
think, 25% year to date. So, that's pretty amazing, that the start that they've had. And the semis always lead the Qs, the Nasdaq 100, and as you mentioned, a lot of the stocks that have been left for dead have had some incredible rallies. I don't think all of them are ready to turn around again, because those 200-day moving averages, a lot of them are still declining. I think
Right.
that we still need some time to heal in those, and these are just bounces. But there's a lot of good-looking setups that I'm, involved in, and looking to get involved in several more that we can talk about later.
Hmm.
So Brian, so generally when you're going through your routine, how are you generally finding ideas? Are you going from market to sector to individual stocks, or
Never.
it's the other way?
Yeah, always. So, for instance, I'm just complete bottoms up.
Hmm.
I, I've been doing this long enough that I can look through a list of 400 stocks in less than an hour
Yeah.
manually. And so rather than, tell the market, look into the market and say, show me what's leading, you know, I'm looking at the components and I see, the strongest semiconductors start to lead before, the SMH starts to lead. So, the components lead the sector leads the index in that way. So as a stock trader who's shorter term focused, meaning swing trade anywhere from, one day if it's a bad one and I get stopped out right away, or, up to 2 to 3 weeks, my edge is that I can look through all these stocks rapidly and find each trade based on its own merits. And then when I start to see a certain sector in those charts, I'm starting to see a lot of the energy names breaking down. Devon broke down today. MRO is looking weak, and they're all just kind of heavy. Those are yesterday's news. There's still people trying to buy dips in there, but the market is saying we've moved on. Energy is yesterday's news. So what are the emergent stocks that are coming out of bases with big earnings surprises, with volume, and showing that on an individual basis they can lead? Stocks like Monster Energy, which is at a all-time high today.
Mm-hmm. Well, so getting back to the energy, just very quickly, what's interesting, so you brought up Devon and MRO,
right?
But when you look like at an XLE, XLE looks totally fine. So the individual kind of sector might be masking what's going underneath the surface, right?
Sure. I think that a lot of them, some components will start to break down and people will think, well, that's just an individual stock issue.
Yeah.
But then the confidence weakens in the overall index, and then they start to follow. And other people are saying, well, there's risk in this group. I've seen, Devon, I've seen MRO, and I don't follow a lot of them, but I've seen these stocks breaking down, and the sector is holding up for now. But those stocks, I think, are sending a warning sign at a minimum to say there's more risk in here than you realize. The easy gains have been made over the last 2.5 years. Mm-hmm. Now it's time to be super defensive and rotate out of these stocks into something where your money's going to be treated better for the next 6 to 9 months down the road.
Right. And what about rotation within kind of a sector sometimes? Because, oil and gas, energy, there's a lot of different components to it. You've got your, the explorers and producers, and it seems like a lot of the ones that you were talking about, the breakdowns were happening in that area. On the flip side, you have your field services like your Halliburtons and, SLB. And field services, I mean, that's the number one group out of 197 groups right now. That's held up a lot better. Or to Arusha's point, XLE, which is dominated by ExxonMobil, XOM, that looks very different than the U.S. explorers and producers. So do you have to drill down a little bit, and notice, okay, I'm seeing kind of this bifurcation within the sector?
I think that's a great point. That again, to me, it's always about each stock based on its own merits. And so the what did you call them? The producer explorers.
Yeah.
Is that what you call them?
Yeah, the explorers and producers, ENP. Yeah.
Okay, because I would traditionally maybe look at the OIH, the oil service, which I think is similar. I'm looking at a chart of those, and I mean, a year and a half, 2 years ago, this index was at 60. Here it is at 326 today. Mm-hmm. It's up fivefold. I mean, you've got to. I always think, relative strength is great, but you have to ask, what's reasonable. What's reasonably left in this sector? You could back it up to a longer term chart and make a case that it could run to 500, and that's it's still clearly in an uptrend. So to me, I think that, if one subgroup of the energy is starting to break down, it just tells me, if I was involved in those stocks, just be careful. There's more risk here. Be ahead of it. Don't be complacent with these large gains. And if another group is breaking down, I want to know where my stops are. I want to, maybe not necessarily look for any new ideas in this group, but make sure I know where my risk management is. The worst thing you can do is, buy something at, 80, it runs up to 323, and you ride it all the way back down to 150, and then you puke it out and tell everyone, the market's so stupid that, Biden's selling the strategic petroleum reserve. They're going to need to buy more energy, and justify it all the way down like we saw
Right.
last year. Hopefully people learn from 2022, but as we know, people continue to make the same mistakes over and over again. They get sucked into that emotional cycle, especially the greed that they can't sell their winner until it's too late.
Yeah. Arguing with the market is not something that is usually a profitable thing to
No,
do.
not for
Um,
me.
so, Brian, maybe we could have you kind of shift gears a little bit. And again, I maybe to introduce people to the ideas that you're looking at, the support and resistance. Are there levels that you're looking at right now of support and resistance in the individual indexes? Are you using the anchored VWAP on indexes to kind of give you an overall sense? I know you're bottoms up, but do you
Yeah,
still use it on the indexes to kind of give you a sense of where you see things going?
I do. I want to be aware of what the market is and what the environment, what the backdrop is as far as risk for the overall market. Because 6 months ago there were still good long trades, but when I was involved in those, I was only doing so with half and third of my normal risk units. Now I'm using, now I'm looking at it saying I'm going to start to increase my risk because some of these setups are supported by an underlying market. So when we look at the SPY, for instance, I think last week's low is really important. We had a
Hmm.
flush down on the 10th. If we break below that, that was right next to the 20, or you guys look at the 21, but it was
Yeah.
right next to that as well. We're holding above the anchored volume weighted average price from the all-time high for the last 2 weeks. That tells me that balance, it's coming into balance where the supply was greater than demand. We had the fearful sell-off price wise. Now we're seeing more of a time correction where that equilibrium is being found, and it seems as though we're in a position, the best position we've been in for a while, where if the buyers can maintain and hold above last week's low, we could build from here and provide those higher highs and then higher lows. And I personally don't think we're headed for another rip roaring rally, but underneath the surface it provides for the context of a stronger market, gives me at least we're not going down anymore,
Yeah.
therefore the stronger stocks have a better chance of outperforming.
Hmm.
Yeah, and Brian, maybe also talk a little bit about just the behavior of the market, how it's subtly shifted too, where it seems like at least over the last couple of months, anytime we had some bad news, maybe the CPI was a little too high or some other kind of data point came out and the markets would gap down, by the end of the day, they somehow found a way to finish positive.
That's a huge tell right there. I mean, that tells us that, the initial reaction might have been visceral, I've got to sell and panic, but the
Yeah.
cool heads come in and say, it's not as bad as it looks because we're looking 6 to 9 months down the road. And maybe we hit a little speed bump here, but there's still opportunity for this market to provide upside. And we're betting on the future because, as we know, it's a discounting mechanism. So we have the opportunity to position for what inflation might look like in 6 to 9 months. Maybe it's going to be down to, I'm just making these numbers up, maybe it's going to be 3.8%. And when it is 3.8%, then maybe that's kind of a target that people start saying, well, the market's rallied 15%, we're at 3.8%, let's start selling stocks again on the good news. Because
Yeah.
when good news comes out and it starts getting sold into, just the opposite, that's distribution. Instead, we're seeing accumulation, and accumulation is we have buyers who say, I don't care about today's news, I want shares because I'm looking down the road. I'm going to buy from the weak holders who are throwing their stocks away on a headline. And that's a strong tell, just like you pointed out, Arusha.
Hmm. So one final thing to kind of just address, there's certainly still a lot of people that maybe got involved with the market on the later side. 2020 was rip roaring, and then they come in at 2021 and to things like Peloton and Zoom video and ride those things all the way down through 2022, and so now there's this overhead supply with a lot of these stocks and with the indexes themselves. Do you find that overhead supply as a concern, as we kind of try running into that some of these folks are going to be like, oh, finally I can get out and recover a little bit of what I lost?
Yeah, I don't really view it, Justin, so much as a concern, but as just
Mhm.
levels of interest on the to be aware of on the upside. So it's better actually that we have some breaks up above where natural supply will be released, and we can look at that and say, is that supply being absorbed
Mm.
with strong bids underneath? Are we correcting time wise, or are we getting deep pullbacks from there, saying that there's still aggressive supply looking to get out? If it instead gets accumulated and we
Right.
see a time correction like the last 2 weeks, to me, that's the market tipping its hand saying there's an underlying bid here. And when the CPI sells off and we gap down to the 20-day, 21 exponential, people are coming in to scoop that up rapidly in big size. So that just, continues to tell us little pieces of the puzzle that keep
Yeah.
coming together. And those pieces of the puzzle show up on the puzzle board, which is our charts
Mhm.
where we can interpret all this action.
Yeah, and eventually get the big picture. So
Yep.
great
Yeah.
stuff. So thanks for that. And when we come back, we're going to get into a little bit more of how Brian Shannon uses the anchored VWAP to make decisions, exit entries, and setups, and everything about this very powerful tool. So stay tuned. We'll be right back. Hey trader, it's the new year. Have you made your trading resolutions? Vantage Point can help you conquer volatility in 2023. Learn to trade with artificial intelligence. Visit www.freestockcoaching.com and discover how to predict market trends 1 to 3 days in advance with up to 87.4% proven accuracy. No matter which way the market moves, Vantage Point's patented AI can give you a massive edge. Visit www.freestockcoaching.com and learn how to dominate the stock market in 2023. That's www.freestockcoaching.com. Okay, welcome back to the Investing with IBD podcast. It's Justin Nielsen, your host, along with our portfolio manager from O'Neill Global Advisors, Arusha Pierce, who joins me every week. And our special guest this week is Brian Shannon from Alphatrends, and also author of his latest book, which is, let me back up a little bit, Maximum Trading Gains with Anchored VWAP. So let's talk
VWAP.
a VWAP. Oh, we just did
Come
this
on.
whole Boston accent thing, and so so the anchored VWAP. Let's talk first. Maybe just quickly describe what the VWAP is, and then why you decided to use an anchored VWAP instead.
So for instance, I can look at today for the SPY. Let's look at well, here it is for Monster. I have Monster up, and on a Monster, what we saw today was the stock. So this is 1 day right here. This is today from this
Mm-hmm.
point forward. So we gapped down a little bit and sold off for the first 15, 20 minutes. And then we closed above the daily for 1 minute. Okay. So we had one bar close above that VWAP for the day. That's also where we saw yesterday's volume weighted average price. So it got above the 1 and 2 day volume weighted average price right there. I bought right in this general area. I had some yesterday too, but I added to it today. And on my add, my stop was below the low of the day. What that
Mm-hmm.
told me is from the beginning of the day, just the first 20, 30 minutes, 35 minutes here, who had control, the buyers or sellers? If it was below that volume weighted average price, it meant adjusted for volume, the average price that this stock traded at started out right here and then declined. As it got back above there, it told me the people who sold short on the open and were feeling good about, maybe their thought was maybe it was going to break down something like this and continue lower. Instead, at that point, they were losing money. The dip
Mm-hmm.
buyers who accumulated, they were in control. So I want to be on the team that's winning based on, what the bigger trend is as well. Of course, it's not just the 1 minute, but on the 1 minute chart, here for today, you can see the buyers had control the entire session because we had a beautiful pattern of higher highs and higher lows above that raising volume weighted average price throughout the session. And unlike a simple time based moving average, you can see that down here where the volume is, as the volume really sped up here late in the day, it dragged that volume weighted average price rapidly higher because it's assigning more value to where the volume traded So it's going to give you a more accurate picture versus a time-based moving average. You might have a 20-period moving average, let's say, that looks like this throughout the day on a 1-minute chart. But this tells us, the buyers are in control as long as it's above that level. When we back it up to like a 15-minute time frame, what I have here is the year to date. I just keep that on all my charts. But let's say we wanted to look at it from the last little higher low right here. So that was the 2-day. So we can look at it and we can anchor it from all these key levels. So if we go back to what we were talking about with the SPY, if we look at the SPY and we say, here's the pink is the year to date, the blue is the 20-day moving average, green is the 50, and the black is the 200. Just so I don't confuse people. But here's the volume weighted average price anchored to the all-time high. So as we made this pattern of lower highs and lower lows, and as we know, we broke that trend line and then we kind of dropped back down below it. Well, that trend line, we saw that volume weighted average price off the all-time high was right there as well. This time it rallied up to it. It pulled back a little bit. Now it's fighting to hold that. So again, this is kind of that balance, finding that from this point, the average short seller is now losing money. From this point, the average buyer from that high is now, in a winning position. It's the best way to think of it is a dollar cost average. If you were to buy $1,000 worth each month, consistently in here, or short $1,000 each month, your average price would be somewhere along this volume weighted average price for that time. So it tells you with 100% certainty from this point, the highest point this market ever traded at, the average participant is now in a winning position. It's the bull's game to lose. It doesn't mean they're going to be able to just hold on to it. We saw previously that we got above it right here, but then got rejected that trend line and 200-day moving average. So it's a great complementary tool. And a lot of times, especially for shorter term timeframes, it's a great standalone tool. And it's a great standalone tool for, earnings reports, for instance. DT, these guys, Dynatrace, on the daily time frame, we can look and we can see, they reported earnings right here. So I want to look at that and say, on a 15-minute time frame, this is the event. And the buyers gained control initially, and you'll see this a lot of times on the daily chart. It gaps up, it pulls back, regains the VWAP, and then the buyers take control. Well, they lost control over here, and then that acted as resistance. It acted as resistance, and now it's kind of balancing back and forth again. I look at this 5-day moving average as well, and I'm not long this stock, but I want to get long here tomorrow, because when I look at the daily time frame, I see a stock above a rising 20, 50, and rising 200-day moving average. And then I look to the weekly time frame. We're above a rising 10, 20, 30, 40-week moving average. We can look at traditional up, stage 2 uptrend, stage 2 3 distribution, stage 4 decline. They didn't scare you out. They wore you out. All of the moving averages are heading higher. We broke resistance on a big increase in volume down here. And when we look at the average price from the all-time high in Dynatrace, so I'm just going to take this anchor tool and drop one right there. That's that purple line. And look at how we're holding above that number. Well, that gives me added confidence. We had a fundamental event, the earnings report. After that earnings report, we've seen this, kind of battle between the buyers and sellers. Now above here tomorrow, I think the buyers take control, and my stop will go for me initially under here and here. I'm going to have 2 stops. Half of it underneath this little low, just to keep it a little bit tighter. So I don't think this one will get hit, but just because if I get shaken out of part of it and it rallies back up, then I'll still have part of it, or I can add back to it later. But that's, the type of stock that I'm looking for in terms of using the volume weighted average price on multiple timeframes. So it all comes back to, volume weighted average price over multiple timeframes. So we can look at it with this view, where I have a weekly chart, the daily chart, the 30-minute and the 10-minute time frame here. I don't want to confuse people with 4. 2 is enough.
Yeah.
But that's how I kind of look at the, how these time frames flow together.
Yeah. So Brian, I remember it was a few years ago. We were at the Money Show, and I watched your presentation
Right.
on all of this. And what was really interesting to me is that this is what institutions are using, and that's when it really clicked, when you were going through a number of these examples, and you were just talking about how the institutions are using this. These are the prices the institutions are paying for these stocks, and it at that point is like, this is a natural fit towards our methodology, right? Our whole methodology
100%, yeah.
is based around trying to figure out what the institutions are doing. And so in addition to kind of having the traditional 50-day moving average, 200-day moving average, this gives you almost real-time, more specific, stock-specific prices when you're using an Anchor VWAP.
It's 100% true who's in control from that event.
Yeah.
So, in the book I described that Ken Griffin, who who's just crowned the all-time, highest earner in terms of hedge funds of, Soros, Druckenmiller, you name them, all those guys. He's earned more money than any other hedge fund out there through his fund and BlackRock. BlackRock, as we know, is the world's largest, market maker, principal agency business, principal and agency. But 2 years ago, when he was called to Congress to testify about the institutional and BlackRock's role in, not BlackRock, I'm sorry, what's it? A Citadel.
Citadel, yeah.
Thank you. Citadel's role as a market maker in GameStop and AMC and, the halts and all that nonsense. I watched the testimony, which I rarely do stuff like that. But something that he said really struck out to me. And I put his quote in the book because it's really powerful. Because people say, well, why does the anchored volume weighted average price have significance from a certain date or event? And what he said was, 36% of all of our business is algorithms, or maybe 63. I don't remember the number. He said, and the large majority of that is based around volume weighted average price orders. He went on to say it's not just for one day, it could be a week, it could be a month or longer. So here's the guy who's making more money than anyone else in the market saying we use these programs. So when you see stocks like Amazon coming down right to the year-to-date anchored volume weighted average price and bouncing from there twice so far this year, or a garbage stock off the bottom like Coinbase, where did it pull back to? Yeah. Right to the year-to-date anchored volume weighted average price with precision. I mean, you can't make it up. Etsy, boom, boom, boom. The buyers are there. They're saying we're buying for the longer term. And then you look at a stock like, everyone likes this Celsius.
Yeah.
Well, Celsius initially found buyers at that, but now the sellers are defending it. We have year to date, the sellers are in control. We have a declining 20-day moving average. We have a declining 50-day moving average. This is not the stock in this group to buy. Monster Energy is the stock to buy. Look at how it finds buyers at the year-to-date volume-weighted average price, and it's breaking out to new all-time highs. What about Peloton? Even that garbage stock when it pulled back. Where did the buyers emerge right in there? I mean, I could go on all day with this stuff. Even another garbage stock, Palantir. Buyers, 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 all at the year-to-date anchored volume-weighted average price. How about Square? 1 day below. Oh, Brian, it didn't work. Well, again, as I point out in the book, to me, it's a level of interest. It says it's pulled back there. So now what I want to do is I want to look to the shorter term time frame when it is right there. So as it's there, well, that's this point. Do I want to buy at that point on the touch of the year-to-date anchored volume weighted average price, let's just say was right here? Or do I want to wait for some kind of consolidation, buy as it breaks a higher high right here, and set my stop underneath that most recent relevant low? And then maybe add to it later on. So to me, that's the way, the proper way to use these.
Mhm.
And, I can go on with, I've got a few, really good examples. I bought the sneaker company the other day on holdings. It broke slightly through that year-to-date volume weighted average price, but it nailed with precision just below it the volume weighted average price from this low. So year-to-date, week-to-date, month-to-date are often important, highs and lows. So for instance, what I'm looking for an on, if we look at this and we back it up, you can see this orange line up there. And what that is,
Yeah.
that's the volume weighted average price from the IPO.
Wow.
So when I
Okay.
look at that, it
Mhm.
tells me it's likely to go up to that level. And I don't think it has to halt there, but it's a level of interest where it's going to maybe do something like this, pull back and give me another entry over here, similar to the way I called this one, on the day that Meta reported earnings right here, I said, who's buying up here? This is the average price since the all-time high after the stock just doubled. This is not a place to be a buyer. This is a place to be selling. So since that event, we had a little bit of a wrestle, but now the sellers are clearly in control from that point. Maybe it's going to, before this stock settles down, maybe it's going to do something like this. Maybe the 20-day moving average catches it, or maybe it comes down and catches the year-to-date volume weighted average price and then goes. But to buy it up here after that big move into a potential, that's all we knew was it was a potential important level. We spoke about energy. So 9, here's, year to date, the buyers were in control. The sellers took control right here, defended it. And when we look at that, it looks like it's in free fall. But if we go to this low, maybe there's a reason that the buyers are emerging right there.
Yeah. Yeah. So, well, first for those who are listening to this, you definitely want to go when you get home. You definitely want to hop on the computer, watch the video at investors.com/podcast because it's really interesting just seeing all of these anchored VWAPs coming up and showing support and resistance. I think it's really fascinating.
I'll tell you what they need to do
Yeah,
first.
it's one of those things where you say, you can't make this stuff up. One of the things that's always impressed me, Brian, is when you're on IBD Live, a lot of times it comes down to the penny, almost, and get support exactly where you're like expecting it to.
It blows my mind to this day. It really, truly does. And there's a chapter in the book as well that talks about how do you want to use the anchored VWAP. It's not necessarily going to be the way that I use it. I don't like to buy right here, right at that point. I like to see it stabilize and move away from that and show that the buyers have gained control. But there's enough times where it touches it precisely and then moves higher like on did. I could have owned on lower than where I bought it as it touched that volume weighted average price, which was right here. I bought right here instead. So, I bought there, after the morning shakeout and my stop was under here. If I bought there, where does my stop go? I don't know. But here I have a level to protect against. So before people watch this or watch it once, buy the book at Amazon, Apple, or Google. And I usually don't promote like this, but it's brand new. I have to.
Yeah. For sure. No, it's well worth it. I mean, it's an incredible textbook. There's a lot of great examples. And this is the only way you're really going to learn. I mean, just watch these videos, just like Brian said, but having this reference, I think, Brian, one of the things I like about this book too is, and you mentioned this a little bit in the first segment, but you're bringing just a lot of the kind of traditional technical analysis stuff and combining it.
Yeah.
Right. So for those who are newer to technical analysis, they're also going to learn those concepts too.
It's so important. I mean, all the things that we learn, right? A lot of people look at, head and shoulders patterns and they say, well, that's bullish, an inverted head and shoulders pattern. But what they fail to recognize is the psychology of what's going on to create that. And just how simple it is. It's a pattern of lower highs and lower lows. Then we have a higher low. And as soon as it breaks the neckline, that's the higher high. Well, it's just a transition from sellers in control to buyers in control. And if we can put a volume weighted average price in there that tells us with precision that that's exactly where the buyers do in fact, have control, I mean, it kind of it just adds a little bit of confidence to everything we're doing, because again, it's 100% truth of supply and demand. That's all we're looking at.
Yeah. And one of the things I really like about, what you cover in the book is that, again, this whole idea behind the anchored VWAP is that you're, sometimes using an event, sometimes it's a year to date, sometimes it's an earnings, but you really go into how do you choose your anchor? Where do
Yeah.
you put that?
Yeah.
So
Yeah.
maybe we could just talk a little bit about earnings, and one of the reasons why your earnings are so important. You mentioned a couple gap ups. Um,
Mhm.
how do you use that anchored VWAP when there's an earnings? Because I mean, we're right in the middle of earnings season. Well, we're
Right.
we're on the tail end of it, but there's still a lot
Yeah.
of setup that have earnings coming up. And how do you use that for those stocks?
But you look at this INMD, which had a huge, move the last 2 days from 34 to 41.
Mhm.
Hmm.
And, here's what's important about that. It broke above the COVID volume weighted average price, which you can see it held it back here, on several, and here's the anchored VWAP from the IPO. So it was kind of pinballing between, or pinching between, the AVWAP from the IPO and then from COVID. And then the AVWAP from the all-time high, you see how we ran up to it, and it's been
Hmm.
kind of
Yeah.
threatening this breakout forever. They reported earnings 2 days ago, and it's had this runaway move. Well, I missed it this morning on that little pullback, so I'm not going to chase it. I didn't like the initial volatility. This is an important event. So what I'm looking for in the case of INMD is, maybe it rallies another day, maybe it rallies another 2 days, but eventually it's going to correct. And maybe it just corrects through time where it does this. And well,
Hmm.
what's going to happen is that volume weighted average price is going to be dragged higher by it. So it's either going to correct like that, or it's going to come down like this. And then I want to then put an anchored volume weighted average price off of here. Let's say that's the peak. Well, if I have a VWAP off of that peak, I'll say, it'll come down like this. And as long as it's below that, the average person from that peak is losing money.
Mhm.
But
Right.
if we then see the volume weighted average price from the low kind of pinch together with that peak, and then the buyers gain control over here, I want to be a buyer here with my stop underneath there, the where that low occurred. Um,
Hmm.
FSLY just reported. I missed that one as well. And the question is, do I want to buy it up here? So if we put a volume weighted average price anchored to the earnings, you can see how yesterday it pulled back, or 2 days ago it pulled back to that on the open and then ran. But here's what we want to look for as well. What about the anchored volume weighted average price from these highs? So when
Hmm.
we look at this high, that's an important high right here. Maybe it's going to run up to there before it finds supply. So that's, it can give me an idea of where it might go as well.
Hmm.
Because as you Justin earlier was saying, what about all the potential for supply from people who are holding these things on the way down? Well, if we can measure objectively where that supply is most likely going to halt the progress of the stock through this anchored volume weighted average price from those emotional turning points. So, where we got a big shock to the supply and demand is one of the best reasons to, places to anchor. And obviously earnings do that. We
Right.
get a report card for the company of the last 3 months, and wow, they're way better than expected. I got to go in and buy. I don't like to chase them because sometimes they fail. I wait for things to settle down. Sometimes I miss them and they just continue without me. And
Hmm.
that's fine. It's about process, and everyone has their own. So there's a lot of ways to use it. You could, anchor a volume weighted average price even to this place where it accelerated, or
Mhm.
the
Hmm.
handoff, and maybe say, okay, well, I purchased on this day. Now, as long as it remains above that volume weighted average price from that acceleration point, I'm going to raise my stop up underneath the higher lows with that, and I'll get stopped out here because maybe then it's going to come down to this one, and I can reload and buy on the way back up.
Yeah. Great stuff. And so again, this is definitely one of those episodes where you really want to check out the video because Brian's markups. Again, we handed the controls over to him.
Yeah.
We couldn't trust it in anyone else's hands. So definitely check that out at investors.com/podcast if you're listening to this. Really great stuff on the videos. And speaking of videos, we should also mention that you've got a lot of videos, weekly content that you
Right.
do on YouTube, because a lot of the stuff it takes a few times. It takes a few times to really kind of get like exactly what you're doing and how important this is and how well it works. I mean, once you see the 50th time that it's coming right down to that level, you start getting a little bit more confidence in it. So certainly at YouTube, you can just look up Alphatrends and watch a lot of Brian's content. So
Yeah.
when we come back, we're also going to talk a little bit about some more stocks that are potentially setting up right now and some of the ways that Brian is looking at these. So stay tuned. We'll be right back. Hey trader, it's the new year. Have you made your trading resolutions? Vantage Point can help you conquer volatility in 2023. Learn to trade with artificial intelligence. Visit www.freestockcoaching.com and discover how to predict market trends 1 to 3 days in advance with up to 87.4% proven accuracy. No matter which way the market moves, Vantage Point's patented AI can give you a massive edge. Visit www.freestockcoaching.com and learn how to dominate the stock market in 2023. That's www.freestockcoaching.com. Welcome back to the Investing with IBD podcast. It's Justin Nielsen, your host, along with Arusha Peiris, my weekly guest from O'Neill Global Advisors. He's a portfolio manager over there. And then we also have Brian Shannon on with us again this week. He's from Alphatrends, author of a multiple time frames book, and his latest book is on the anchored VWAP. To really kind of understand how to maximize your trading success using some of these tools. And he already gave us a really nice preview of how he uses it, but what he's going to do is he's going to look at a few setups right now and use that anchored VWAP tool to kind of show how he's looking at things. So again, this is one where it's going to be a little bit more video heavy this time because look, you bring a technical analyst expert like Brian on, and you're going to get some video here. We'll start with FAST. So FAST,
Okay.
Fastenal, and you can just kind of show your charts here. And again, this is Brian showing his TC2000 setup. So where do you have your anchors right now, and what are you looking at?
Okay, real simple. So I've kept this orange one on all of my charts since the COVID low. You know, that it was just a real important measure for the market in a lot of individual stocks, and continues to be to this day for a lot of stocks. Maybe not so much for Fastenal, but for Fastenal, you know, first we want to focus on this most recent move. You can see that it rallied up on big volume over here, and this consolidation is occurring on lighter volume. So you had this first bump up on big volume, then a little bit of a rest, and then that big spike here in lighter volume. So that's telling us it's correcting through time above this prior resistance. So we had the pattern of lower highs and lower lows. Now we have this higher low and this higher high right here, and that prior resistance is holding the support. So I look at that and say, let's back it up a little bit. Let's look at the weekly time frame just for a simpler view. And that's a monthly, but here's the weekly. So oddly, it held the 200-week moving average. But here we see the 10, 20, 30, 40-week moving average all flattening out and turning higher. And again, that very clear pattern of what had been lower highs and lower lows has now become a higher low. And by breaking this, we have a higher high. That's the definition of an uptrend. That's the type of stock I want to be involved in here. It's not like I want to be involved over here. I mean, you make money over there, but this is getting it, as it's fresh. It's a fresh stage 2 uptrend. And the way they typically go, if they're going to, stay intact, is maybe run up to this level, pull back a little bit, run up to this level, exceed it just a little bit, get people excited, they chase it, and then it pulls back, and then it runs off to new all-time highs. So that's kind of the overall thesis on the weekly chart. And I want to say, are the buyers actually in control? So we take this anchored VWAP and we drop it right there on the all-time high. So again, we had that back and forth. The most recent time it touched it, it got rejected hard. And then this is pink is our year-to-date anchored volume weighted average price. Now we can see that that volume weighted average price off of that peak over here is, had been resistance. Now it's turned to support at that prior resistance as well. So we kind of are, just reinforcing that the resistance became support, not just from this peak, but from the average price. So the average short seller in this time better hurry up and cover their shares, because the longs are now interested and in control. So when we look at the two time frames together, the daily, one thing I'm not thrilled about with this stock, and this was just about 200 days ago. I keep an eye on that just to anticipate the direction of the 200-day, just to explain what this vertical line is.
Okay.
But it's kind of choppy. So I don't like the personality of the stock so much, but it seems to be finding some order in here since this large volume break. So where did the last upward move begin? Right here. So the average price since then, we had an important low here, and this is clearly an important high. And when we look at it from that important high, it starts to show a little bit of order where sellers have been there. So I'm looking at this stock and I see that this morning it was, 52 and a quarter. It ran up to 53. What I'd really like to see tomorrow morning is a pullback just briefly, create a higher low here, break that level. I'd like to be a buyer here, or even as it's breaking here, and then have my stop underneath the volume weighted average price from this low right here. Because I expect that if it pulls back, it'll find buyers there, it breaks higher, and then this trend alignment, right now we're in a stage, this was a stage 4 on the, over the last 2 weeks. Now we're in stage 1 on the shorter term time frame. Breaking a higher high here tells me the definition of trend is higher highs and higher lows. So I want to buy here with my stop underneath the most recent relevant higher low for my time frame. For me, that would be right here, possibly moving it up to in this area later in the day. So we have a stage 2 uptrend on the 15-minute time frame that's in alignment with the uptrend on the daily and in alignment with the trend on the weekly time frame. So all those weave together and tell me that's the lowest risk, highest probability place that I can buy this stock with momentum. And I know for fact the average participant from this peak will then be in control. So just looking at the 15-minute again, maybe pull back, test that 5-day moving average, then get going tomorrow, or tomorrow's Thursday, maybe Friday. But I think it's pretty imminent that it goes. My stop will go here. Maybe an investor who's looking at the weekly time frame and saying, hey, I like the way he drew that out. And, it's kind of like I watch these gold shows on the Discovery Channel. And every time they show these guys digging for the mother lode, Discovery draws in this big pile of gold. And these guys are always digging. They never hit the mother lode. That's what drawing this chart is like. It's not meant to be that's what's going to happen, but that's what, that's how stocks trade. That's the potential. So if you're interested in that weekly time frame, I think your definition of trend would be violated if this low that we can see more clearly even on the daily time frame gets violated. That's where we have a rising 20-day moving average as well. So, it's tying them all together. So that's how I'm looking at Fastenal for tomorrow.
Yeah.
So Brian,
and I think there's something special about kind of having that idea of expectations, and then, okay, now does it either meet those expectations and do what I thought, or does it do something else? What were we going to say, Arusha?
I was just putting it more like executing on it. So if it's once it gets above the weighted price, where are you sending your alerts to kind of, because obviously you're watching a number of stocks. Where are you generally sending your alerts to say, hey, I better watch a Fastenal right now because it looks like it's getting close where I can actually put this into action?
Great question. So tomorrow morning, maybe it gaps up and maybe it gaps up and it pulls back just slightly, but then it gets back above the VWAP. Well, then I'll watch it right here and I'll probably buy it right here. And my stop might be actually under here. But what I'll do, Arusha, is, I'd love to see it pull back first. And if I'm watching it in the morning or there, something else has my attention, I might set an alert at this level, 52.70.
Okay.
I want to see that it pulls back, and I want to just see how it's behaving at that time, and then I'll set an alert at $52.95. So if I'm not watching it, then I know that it's pulled back, and now it's up here just before the breakout.
Right.
I want to know before the breakout so I can pull it up on my screen and say it's hitting this important level. Now I need to drill down, open up and look at my level 2 screen, watch the tape and see if maybe I should anticipate the breakout because it's speeding up and we're seeing volume come in, or the market is broken out and Fed says we're never going to raise interest rates again, we're slashing, and I know that this is the stock to buy. But you've got to be prepared in all those scenarios to say, okay, it gapped up. Well, this is one of my main stocks. I think the weekly chart backs up the potential for a longer term move. So I'm going to pay more close attention to this one. This will grab my spotlight.
Okay.
Yeah. Let's go ahead and move on to another stock. You were talking about Fresh. So Freshworks, FRSH.
This could be a fresh stage 2 uptrend on a weekly time frame. I mean, again, if they don't scare you out on the way down, I think they wore people out over the last year. And, just again, traditional technical analysis. We have a rising 10, 20, 30, and 40-week moving average. We've exhausted the sellers. So the scales of supply and demand have neutralized over that last year. And now we're right at this level where it appears as though it's starting to break into a stage 2 uptrend. So what's the average price since this stock came public? Or how about from this peak? Because I want to know those two levels as, is there potential for supply there? And, that first level is just overhead. But if it goes up to the anchored volume weighted average price from the IPO, it doesn't become my price target, but it becomes a level of interest. And that's right at about $20 per share. So that helps me look at my risk reward and say, here's what I think a reasonable expectation for at least a first push. Oops, wrong tool. A first push could get it up towards that level, and then maybe it consolidates. So I'll get out as it pulls back. And then as it starts to do this, I want to be a buyer again here as a swing trader. Now, an investor might say, hey, I want to buy it here and set my stop under there. And maybe it's going to do that discovery gold pile right down there and, just continue into this beautiful stage 2 uptrend. So then I look to the daily time frame, and those were those drawings. It pulled back. They reported earnings, I believe, just this week, or next earnings report is May 2nd. So they've reported. And so far this year, the sellers started out in control, but then they defended the year-to-date VWAP here. They're defending it again now. We've got, again, that rising 20 and 50-day moving average. On a 15-minute time frame, it's a little wonky in here. So this is kind of a B-list idea for me. I'd like to see it maybe do this, kind of settle down over the next few days. This is for precision swing trade entry. That 5-day moving average kind of comes up underneath it like this. It maybe does a little shakeout, and then, I want to be a buyer here with a stop under there. That's an ideal scenario. The market doesn't care what I think is ideal. So I want to say, what's the average price since that earnings? Well, the buyers are in control. Are they going to defend it, or hopefully we get a shakeout first? But that's one definitely that's high on my radar as well, because it's a lot of people are focused on the stocks that are making the new high over here.
Right.
And when they're extended like that, what was that one today that everyone had been? It began with a C, I think. It just dropped 50%.
Oh, CRDO. Yeah.
Oh yeah.
CRDO.
Yep.
God, what a disaster! But it had just run from 12 to 19. To me, it's prudent to take profits along the way, so you're not stuck with this. I mean, I really feel bad for the people who are really, that were positioned into it and felt great and confident about it, because it was a beautiful uptrend. But this is why we position size things, because once in a while something hits it that's completely unexpected. And if you're too heavily loaded, this is just going to destroy you. You're fighting for the rest of the year to break even. So anyways, back to Fresh. It's a little early in there, but I'm anticipating the trade to set up over the next few days, 2 to 5, 6 days maybe.
Mm-hmm. Let's go ahead and shift gears and maybe take a look at a restaurant stock. This is one we just had the Super Bowl. I'm sure people were having their pizza. So if we take a look at PZZA, which is Papa John's,
Pizza, yeah.
What's your thoughts on this one?
Well, here, so we can look at this even traditionally and say, is that a shoulder? Is that a head? And that's a shoulder. And, that looks like a beautiful neckline that it broke over here. So if we take the measured move, the height of that is, 67 up to 92. What is that? 25 points, I'm guessing. I don't know. Add that to the breakout point here of 85. That would imply a target of 110. So that's one piece of the puzzle. We've got the 200-day moving average just about, turning higher. In fact, today might have been the first day. Yesterday, the 200-day moving average was 83.09. Today, it's 83.12. So it's the first day that this 200-day moving average has turned higher since it undercut it back here. So that was clearly an important level up here. We had this big decline. So what are we going to do? We're going to go and say, what's the average price since that event? And is it a coincidence, do we think?
It's pretty amazing.
So, what we want to do is also say, well, that was an important one as well. Okay. And it maybe not as significant, but we broke back above it today. So let's look at a 15-minute time frame. We know that the daily chart is bullish. Let's actually go back to the weekly time frame. So again, stage 2 markup, stage 3 distribution, stage 4 decline, stage 1 accumulation, higher high with a higher low on the weekly time frame. Now we're in this period where it's the buyer's game to lose. If I was an investor, my absolute worst case stop would go under here. That was a hell of a shakeout 4 days ago. If it violates that, then there's bigger problems for this stock, I think. I don't think it's likely to do that. I got long this stock today. It was just coming up out of this level in here. And that was a fortunate thing. My stop was under here. I took a third off already. And now I have 2 stops, one here and one at, I think it was 92. Where are my notes? My stops are, sorry for all the moving around. I've got a stop at 93.80 and 92.38. So my first stop is right here below this higher low. That's my swing trade, higher definition of trend, higher highs and higher lows. This is the most recent relevant higher low. So I own the stock at 93. My first stop is at 93.80. So I'll lock in a profit. I sold a third today at daily R2, which was at 94.20. That was simply to reduce my risk. So daily R2, and it continued higher, and that's fine. It was to reduce my risk. Now my job is manage risk. Half of my stop is here, half of my stop is under there. So if I get tagged on that first third, let's say it shakes out in the morning, but then it goes on to recover, well, then maybe I'll add back here even and, put all my stop here. But this one just, it looks like it's on its way. This looks like the beginning of a stage 2 uptrend. And this is, I believe they say, one of the best performing stocks, of all time. If you go back to the splits way back here,
right?
That, adjusted for all the splits, it was $1.95, and here it is today at 95.
Yeah, a huge long-term uptrend, and I mean it's funny because Domino's DPZ is kind
That's
of
the one. I think
Domino's has
another
been the amazing one.
Yeah. It's in a similar boat where you just look at that long-term uptrend and it's like, what, who would have thought? Everyone's looking at Apple, but maybe they should have been looking at Domino's.
And I just want to say something. I think not only just seeing all these examples has been really educational, but just hearing Brian just go through the process,
right?
Seeing just hearing the scenario analysis, right? He's thinking about every aspect. What happens here? What do I do here? I mean, that's, he has his process down, and that's what, we all have to do when you're thinking about this. So because you want to make it as objective as possible, not let your emotions really get the best of you, in real time.
So here's something I'll say. I would say, I'm in this. So what good does that help you and the people watching this broadcast? What I might look at tomorrow or the next day is that if it begins to pull back here, let's say it goes on to break this high. right, from a few days ago. I
Mhm.
would think it's most likely, since it just came from 88 to 97 and it breaks out, I would expect it to pull back from there. And
Hmm.
maybe it pulls back to the volume weighted average price from today, right here, and then there's a better opportunity, sometime next week. Or, maybe tomorrow morning it pulls back to today's VWAP, so it becomes the 2 day or second day VWAP. And then tomorrow's VWAP looks like this. So I would want to be a buyer as it gets back above tomorrow's VWAP with a stop below this pullback low, because I know I'm entering the trade late because it's just run, what is this, 8 points, seven
Yeah.
points, or, close to 10% in just 5 days. And that's one of the biggest things that people do is they chase these stocks that are up 10% in the last 2, 3 days. And there's a lot of examples where they work, but there's a lot more examples where they
Right.
pull back and give you a better opportunity in 2 to 3 days.
Yeah, just requires some patience. I want to
Yeah.
get through one more stock
Sure.
because I thought this one was really interesting looking when we were talking about it on the pre-show. Let's take a look at BSX, Boston Scientific. And what really interested me about this was again that multiple time frame approach that you take with these things.
Right. So if we look at the monthly time frame, this was a huge winner, and it's had a couple of huge runs in its life.
Hmm.
Um, I actually did really well with this. Even it was way back in here when I was working at Lehman Brothers. I was first buying options, and it used to split every 3 months, and I just made so much money with options in there because I was at Lehman Brothers in Boston. Anyways, we just eclipsed the high from 2003, 20 years ago.
Wow.
And how did we eclipse that high? Well, we did that by consolidating underneath it for the last 3 years.
Hmm.
And notice how, that resistance, then we built this beautiful little launch pad here on this weekly time frame. And 3 weeks ago, we had earnings, and that motivated the buyers to push it out of that consolidation. So when I look at this, one, back to the daily time frame, we're holding above the rising 20-day moving average. Let's clear all this stuff off. Here's the 20-day moving average. Here's the year-to-date VWAP. We've got a rising 50-day moving average. And that break of this short-term resistance is acting as support as well.
Hmm.
So, you know, that would tell me a stop would go under here, worst case under there. So
Mhm.
when we look at the 15-minute time frame, the earnings report was on this day right here. It got that big move. Well, it's been really choppy since then. I don't buy stocks with a declining 5-day moving average. So I want that 5-day moving average to flatten out over the next couple of days. And maybe it starts to do something like this and then breaks this little band of resistance. I would then look at, well, of course, we have to see what's the volume weighted average price off that peak. And again, it's probably a coincidence there were sellers here and here and here. But if it then breaks above it right here, I want to be a buyer with my stop most likely under here for a swing trade. For an investor who's looking at this going, there's no potential overhead supply, your stop, I think, would go under here. Maybe if you're really looking at a longer term hold and you want to put a big stop on it, I think it's unnecessary, but underneath that higher low.
Yeah.
Mhm.
Hmm. Well, again, I think this is just another good example of how using those multiple time frames, drilling down and really coming up with some precision on where exactly you're looking at your entries, your exits, and again, a lot of this is all outlined in your brand new book. That is focused on the anchored VWAP, and I haven't finished it. I've started it, but I will tell you, just looking at the table of contents got me excited because
Cool.
it's just even the table of contents is like, wow, this has got
Yeah,
some
it's in
great
depth.
stuff in it. And plus, it's not only just the details here, but you go through a lot of those foundational things,
Right.
technical analysis foundations. So it's not something, if you're getting lost on this video, know that there's help there, and you go through a lot of this stuff with a lot of hand holding. So I think that's great for beginner investors too.
You know, and I will tell you that a beginner investor should start this book backwards and start with the appendixes.
The appendix, right?
Because I did a little bit of, brush up on the 5-day moving average, on stage analysis with the, the stage analysis chart and all that. So that's where a beginner should start, is in the back, then go to, the front section and the second section, which is strategy heavy.
Yeah. So again, this is what the book looks like. Very similar in the way that it looks to your first book on the multiple time frames, and that is available on Amazon. Just look up Brian Shannon.
And the book is nice and big too.
Yes,
that's what I like too. Like big letters, big examples. I mean,
Yeah.
it's really nice.
Everyone our age points that out.
Yeah.
Like the 20-year-olds are looking at it going, what the heck? Do I have some inverse readers for this?
How do I get this to fit in my bookcase?
Right.
Yeah. So, and of course, another thing that people should check out is your YouTube channel. If they go onto YouTube, subscribe to Alphatrends. A lot of great video content there, so that you can just kind of turn these ideas into part of your routine and really kind of understand where that support and resistance comes in. So thanks again, Brian Shannon, for being with us. It's always a pleasure having you.
My pleasure. Thank you.
Okay, that's going to do it for us this week. Join us next week. We may have a special guest for you. We're working on some of that. Otherwise, you're going to be stuck with Arusha and I going through and checking out what's happening in the market and everything that we like to talk about in terms of the Investors Business Daily methodology. So stay tuned for that. And thanks for joining us this week. We'll see you next time. Make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.